All right, gang. So welcome to the stock charting basics class. And in this class, we're going to go over the language of chart reading. Okay, this is going to be something that is critical for you to understand technical analysis. And before you begin stock trading or options trading, this is very critical. So to make it simple for you is that if you're looking at my screen, you'll see these candlesticks. You see these greens and reds. These are what we call candlesticks. These candlesticks, this is basically the language of the stock market here. The same way we have musicians that have, keys and scales and progressions so that you can play music and communicate that to other musicians. The same way the stock market works as well. And our language is price action. So price action is basically buyers and sellers moving the price. They're bidding the prices up and down. If you remember in the previous courses, we talked about the concept of the stock market. An easy way to remember and to think about it is think about it as an auction, okay? Where you have buyers and you got the auctioneer who's, selling things for people that want to sell. So this is the same way. And so basically what I'm going to do is zoom in here on a candlestick so you guys can see these things, okay? And so there's basically two types of candlesticks. We have the bullish candlesticks and then we have the bearish candlesticks. So green represents bullish, and bullish means that they're optimistic. That means that the buyers, they're buying up, they're bidding up the price. So the price is going to go up. And then red signifies bearish. That means that there's, there's pessimism that's coming into this time frame of that particular stock. And so then you have the investors, they are looking to sell at that particular time. Now, I have to talk about time here before we can really get into it, because in order for you to really understand how this language works, the same way the musician understands the different scales and the different keys that you have to play in before you can get into the notes. Well, it works the same way here as far as the time frames are significant. So if you guys look on my chart, I have this daily chart that's pulled up right here. And so this daily chart signifies that the session concludes at the end of every day. And so the candlestick will be formed, the whole candlestick will be completed at the end of the day. If I dial in and go to a 30-minute chart, the candlesticks will be formed every 30 minutes. So think about the daily is the big one. We're going to dial in to 30 minutes, and then we could dial into a 15 minutes. So that means every 15 minutes, a new candlestick will appear. So this is 15 minutes, 15 minutes, 15 minutes. And then we can go all the way in to a 5 minutes also, and a 1 minute. Okay. And so most day traders, they normally will be reading these candlesticks off of like the 5 minutes and the 1 minute, the smaller time frames. And swing traders, they're trading off of the bigger time frames, like the dailies and the 30 minutes. So this is important because the candlesticks are formed based off of the time period that you set your charts to read. Okay. So with that being said, I actually want to take it back to the daily real quick. And let's break down the anatomy of a candlestick here. All right. So say, for instance, I have this. Let's take a look at these two candlesticks here. I'll take a look at this green one right here. So this green candlestick here, it has a body, okay? The body is the big rectangle here, okay? See that rectangle, that fatness? That is called the body, okay? So the body of the candle is here. And then you see these little spikes in here. We call those wicks. So, because they kind of like a candle, like you buy a candle from the store, looks similar to that. And sometimes you have those wicks that form at the top and the bottom, sometimes only at the top, sometimes at the bottom. Sometimes there's none, okay? But these are significant to reading the stock charts because they mean something. So this body here on a bullish chart, it signifies differently from the bearish chart, okay? So what's important to understand is that in the candlestick anatomy, you have what's called the open, the high, the low, and the close. O-H-L-C, okay? So on bullish candlesticks, the body, when we're reading this, it lets us know right here at the bottom of the body, at the bottom of the rectangle, this is where the stock price opened at during this daily session. So on this day, if you look at my time frame, it says March 2nd. So on March 2nd, the price of this stock, which we have Apple, it opened up at this price here. Okay. And that's somewhere around let me see. I can read it over here. It says 282.28. That's where it opened at. The high of the candle is the wick at the top. So the very top highest spike is the highest of the day that the candlestick actually traded at. And that high is 301 and 44 cents. And that candle wick is significant because it lets us know that the price, it didn't really solidify there. It snapped up. It went and tested this high, and then it snapped back into the body. So that's how you get those wicks. Even on the low side, it snapped down and comes back up really, really fast. And that is a testing point. So we're looking, okay, that price is testing that target there, but it didn't complete. So it came back into the body. So just remember, at the bottom here is where we open that on the bullish chart. The peak here is the high, which is the candlestick high, the wick. The low will be the lowest point that the stock basically traded during that session. So it went all the way down here, and that's 277 and 72 cents. And then it closes at the top of the body here, which was 298 and 81 cents. And so if you guys are asking, what are you reading from, Chief? Well, what I'm reading from is at this bar right here, it lets you know that it has OHLC. And all you have to do is hover over any candlestick, and it will let you know the open, high, low, and close of that candlestick during this time frame that we're looking at. So as I call those prices out, there was it opened up here at 282 and 28 cents. That's the bottom of the body. It peaks out at the high, which is the candle wick, 301 and 44 cents. And then it reached its lowest point of the day at 277 and 72 cents. And then it actually closed at the top of the body at 298 and 81 cents. Okay, so just so you can digest this, opens here at the bottom. That's the low. Price went all the way, spiked to the high. Okay, then it shifted all the way back down to the low. And then it came back up and closed at the top, right here, the top of the body. So that's open, high, low, close. Open, high, low, close, OHLC. And this is the way it works on bullish candlesticks, okay? So on bearish candlesticks, it works a little different. It works the opposite. So where the bullish candlesticks open, that's going to be the opposite on the bearish candlesticks. So the bearish candlesticks is going to let you know that, hey, this stock here, it opened at this high here. So it opened up here at the highest part of the body. Okay, it opened here. And then it went to its high right here at the top of the candlestick. It's a little peak right there. It reached its lowest point with the snap down here. And then it closed down here at the bottom. So the difference is that on a bullish candlestick, it opens at the bottom of the body of the candlestick. And on the bearish one, it opens at the top of the candlestick. Okay, and to make it simple, basically the price opened here at the top, and then it suddenly fell all the way down here and closed at the end of the day at this bottom. So it opened at the top, came down here at the bottom. Okay, so that's how that basically works on the bearish candlesticks. So again, we start here at the top of the body. We open here. We reached our lowest, we reached our highest peak here at the top. So open, high, and we come all the way down to the lowest, and we close here at the bottom. That's the OHLC. Okay. And basically these form throughout the whole session. They form throughout the day. Every day a new candlestick forms. And what you want to do is take a look at the previous day. So we're looking at this red candlestick. It's bearish. Why is it bearish? Well, it was bearish because, it opened at the top and it fell down to the lowest. And it basically, it basically opened and closed. It closed lower than the previous session. Okay. Previous session means that the day before, this stock here closed at this top, and that top was at 298 and 81 cents. So it closed at 298 and 81 cents. And the next day it closed lower. It closed down here at 289 and 32 cents. Okay. So from here, from 298 to 81 cents to 289 and 32 cents. That's why it's bearish, because it's lower than the previous session. Okay. And if it's higher than the previous session, we progress to this one here. It opened and closed. It closed here at the top, which is higher than the bearish candlestick that we have. So that's why it is green, because it's signifying bullishness. All right. So I want to actually show you guys all of this in real time so that it starts to actually make sense. And what I'm going to do is I'm going to open up, let's actually go in on a 5-minute chart. No, let's do a 1-minute chart. Let's do a 1-minute chart. And basically, on a 1-minute chart, remember that every minute there's going to be a new candlestick that's going to form. I'm going to show you how these things form in real time here. And I'm going to go to the active trader. We'll pull that up, and then we'll go to time and sales. We'll pull this up. And the reason why I'm pulling these up, because this is the price action that is being graphic in the graphics that we have. The candlestick, this is what it represents. So the candlesticks are representing the prices over here. And as you guys can see, reading numbers is hard. It really hurts your eyes trying to read this stuff all day. There are traders that actually trade this way. Those are called like the tape readers. They're the dinosaurs of the industry. Most people read candlesticks these days. It's your choice at the end of the day which one you want to use, right? So this is the way we're doing it. And I just want to show you this in real time. I'm going to actually just hit play so you can see all the stuff that's moving here. And then you'll start to see the candlesticks start to form. Now, what do we have that's going on here? On this active trader here, we can see buy orders here. This is the bidders. Remember, the stock market is like an auction, okay? So here we got the people that's buying. They want to buy Apple, right? And over here we have the sellers. They want to sell Apple. And as the price is moving, and you see this little gray thing in the middle, imagine that's the auctioneer who's saying sold, sold. And whenever he says sold, that means that we have found middle grounds between the buyers and the sellers. We found the middle ground and we've closed that transaction. So we made a deal, and that's being represented over here in the time and sales chart here. So you have the date, you have the price that the bid was and the offer was satisfied at, and then you have the amount of shares that was sold and that was distributed in that transaction. So it's 100 shares, 300 shares, whatever you have. And then the price of the shares is right here, 298, 298, 211. And so you see the red and the greens is signifying selling and buying also. Now, while this is populating, the candlestick here you see is moving up and down, up and down. Okay? Up and down. That's what's happening. You see it's going all the way up. Price is moving up. But it's easier to read the candlesticks versus reading this price over here. It's still price action, but this is a better visual. You see how that candlestick is moving up? Price is going up versus you reading this and trying to find patterns. It's a little more difficult to try to find patterns through the numbers, okay? But you can see patterns and shapes and things like that right here in the chart and the candlesticks. All right, so that's it real time. And then the last thing I want to cover with you is that this one candlestick here, and I'll leave it in real time here. As you notice that the other ones have these fat bodies. Well, there are some candlesticks that don't have fat bodies, like this bad boy right here. Now, this is what we call a doji, okay? Price basically open and close at the same level, the same price. And so you have like this skinny body, these skinny bodies. You see these little skinny bodies? These are dojis. So that's another type of candlestick that we have, okay? We got the bullish, which is the green. We have the bearish, which is the red. And then we have these dojis, which are, basically sometimes they signify a change in the flow and the trend. And so there's different ways to read these things. We're not going to get into this session, but I just want you to see what's going on, what's happening, what are candlesticks, why does this matter for you, why you need to know it, and teach it in a way that I think that you guys will be able to find value. So hopefully you like the session, and if so, I'll definitely catch you guys in the next class. Peace.